Good morning, this is Dave Toth with an RJO MRT Technical Webcast update on the Mini Russell 2000 and the S&P 500 E-Mini markets for Wednesday, September 21st. Starting off here with an intraday 4-hourly chart of the December Mini Russell contract. We'd like to point traders' attention to the rather nondescript break yesterday below Monday afternoon's 68.83 low that confirms at least the short-term trend is down. The importance in that is that, again, from at least the short-term perspective, the market has defined a 70.83 high from yesterday morning that traders can use as a tight but objective risk parameter to a bearish policy that could produce significant losses in the days and perhaps even hours immediately ahead. For this at least short to intermediate term momentum failure and confirmation of at least the short-term trend is down stems from the upper recesses of the past month and a half's range lateral trading behavior that, on the heels of the sharp impulsive July-August decline, is arguably corrective within a much broader, a larger scale downtrend to what could be significant lows, or would be expected to be significant lows below that key August 8th low at 64.54 on a daily close only basis. Looking here at a daily bar chart on a logarithmic scale, you can see the past month and a half's mere lateral price action that, again, on the heels of July-August sharp impulsive decline, and given its just three-wave recovery appearance and the fact that the market stopped pretty much at the exact 50% retrace of this year's entire slide from 87.20 down to 62.37, the past month and a half's mere lateral price action is arguably corrective. That, if this count is correct, warns of an eventual resumption of this broader developing bear trend to new and potentially significant lows below that 62.37 intraday low from August 9th. These issues considered, a tremendous risk-reward opportunity we believe exists as a result of yesterday's short-term momentum failure and definition of at least a tight risk parameter at 70.83 ahead of what could be fantastic losses in the period immediately ahead. Per such, traders are advised to move to a bearish policy and bearish exposure. The strength of at least 70.83 required to defer or threaten that view. Similarly, moving to the S&P E-Mini chart on a daily log scale basis, you can see the past month and a half's water treading that, on the heels of the July-August sharp collapse, is arguably corrective within a major bear trend. And as we've discussed in our recent technical blogs over the past few weeks, strength above the August 31st high at 12.30 is required to mitigate that threat and expose a larger degree base and reversal higher. In lieu of such strength, and again given the market's recent proximity to the upper recesses of the past month and a half's range, we want to be watchful for any kind of short-term momentum failure that will contribute to this market's downside vulnerability and might lead directly to a sharp, impulsive, perhaps even relentless resumption of this year's broader bear trend. And moving to an intraday chart that shows the past couple of weeks, a week and a half's recovery attempt and the waning momentum over the past few days, we believe a break below Monday's 1181 low, a short-term but we think key low, will confirm at least the short to intermediate term trend is down, confirm this bearish divergence in momentum, the most important byproduct of which would be the definition of the recent highs and resistance at 12.15 as a tight but objective risk parameter from which to objectively rebase a bearish policy, from which a resumption of this year's broader downtrend could produce fantastic losses in the period immediately ahead. These issues considered, traders are advised, shorter-term traders with tighter risk profiles who've been advised to move to a neutral to cautiously bullish policy as a result of the early to mid-September intra-range recovery attempt, are advised to move back to a bearish policy if this market breaks below 1181 and to look to initiate cautious bearish exposure on the immediate break of 1181 with protective buy stops at 12.15 thereafter. And until or unless the market can prove such strength above 12.15 after the market breaks below the 1181 low from Monday, we believe the market will be exposed to further and possibly extreme losses in the period immediately ahead. Please stay tuned to updates on these and other markets on our rjomrt.com website, and good luck with today's trading.